Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight. And sometimes that means a new employment agreement means big changes are brewing. Today we're diving into a recent filing from Modus Holdings Inc., a company that's making quite a buzz. We'll be looking at some new arrangements that could signal a shift in how they operate and reward their key people. So what's the big news? Well, on July 11th, Modus Holdings, or the company as they call themselves, made a pretty significant move regarding their chief financial officer, Rodney Sperry. Before we get into the nitty-gritty of the agreement, it's worth noting what Modus Holdings actually does. They're publicly traded and you can find their stock trading under the symbol AMO'd and their warrants under AMOW both on the Nasdaq stock market. This tells us they are a growth-oriented company, likely in a sector where warrants are common, often to sweeten investment deals. Now back to Mr. Sperry. The company and he entered into what's called an amended employment agreement. Think of this as a renegotiation of his job contract, and the main change here is about his pay. His salary is going up to a nice round $144,000 a year. Here's where it gets really interesting. Half of that salary, that $72,000, will be paid in cash, which is pretty standard, but the other half, another $72,000, will be paid not in cash, but in the company's own common stock. This stock payment isn't all at once either. It's spread back quarterly, and the value of these stock payments will be based on how the company's stock is trading on Nasdaq at the end of each quarter. Now, why is this paying in stock significant? For a company like Modus Holdings, especially if they are an emerging growth company, which this filing indicates they are, this can be a strategic move. It means they're tying a big chunk of their CFO's compensation directly to the company's stock performance. If the stock price goes up, his payment in shares is worth more. If it goes down, it's worth less. This aligns his personal financial success more closely with the company's market valuation, which is a common practice for leadership in growing businesses. It's like saying, we want you, our CFO, to feel the same ups and downs on the stock market that our investors do. Speaking of being an emerging growth company, this box being checked tells us they meet certain criteria that allow them more flexibility with financial reporting standards, which is good to know for context. This move also falls under a section of these reports that deals with changes in key personnel and their compensation. So it's not just a minor update, it's being flagged as an important event. The actual details of this amended agreement are filed as an exhibit, Exhibit 10.1. This is where you'd find all the legal fine print, but the core takeaway is that a substantial portion of their CFO's pay is now directly linked to the company's stock. And signing off on this report representing Modus Holdings is William Alessi, the President and Chief Executive Officer. This shows that this decision about the CFO's compensation has the full backing of the top leadership. So putting it all together, what does this tell us about Modus Holdings? On the one hand, paying their CFO partly in stock shows a commitment to aligning management interests with shareholder value. It's a sign that they want their financial leader to be as invested as possible in the company's stock price. This can be a positive sign of confidence and a strategy to retain talent by making them participants in the company's success. However, there's always a flip side. This also means that the value of the CFO's compensation can fluctuate quite a bit. If the stock price is volatile, so will be the real value of a significant part of his pay. For a company that's an emerging growth company, this could mean the CFO's compensation package is designed to incentivize growth and a higher stock valuation, which is a bold strategy. In terms of assessment, this move doesn't give us direct financial numbers like revenue or profit, but it gives us insight into their strategy for managing and incentivizing key leadership. It suggests a focus on stock market performance as a primary driver for motivating their financial chief. The risk here is if the stock doesn't perform as expected, which could lead to dissatisfaction or a need for further renegotiation down the line. An opportunity lies in success where a rising stock price benefits both the company and its CFO. Overall, Modus Holdings seems to be employing common yet significant strategies to align their executive compensation with market performance. It's a move that signals their focus on growth and their belief in their stock's potential. Alright, that's our breakdown of Modus Holdings' latest filing regarding their CFO's compensation. What's your take on paying executives in stock? And what does this signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. Don't forget to check out the Discord in the description where we discuss these filings further. Thanks for watching. See you next time.